Today is Thursday, January 20th, 2019. We are on the S&P 500 index. My last update, which was last Wednesday on the 9th of January, I identified a few points of interest within the structure. The first one being we'd formed a bearish, a rising wedge, and I was anticipating for it to still conform within the wedge up until its termination point, which I'll get to in a minute. Now, I just want to clear a few things up. I've had a few emails asking me, some viewers asking me, watched or seen other technical analysis, and I don't know whoever it was, but the analysis is that the price structure had broken out the wedge, so it no longer becomes valid or avoids this structure. Now, first of all, I'm not here to pick on or have a go at anyone else's work. That's not what this is about. As drawing in trend lines which form patterns and structures is an art form within itself. And second to that, depending on what type of charting software you're using and what it includes. Now, what I mean by that is this charting software is pro real-time. For any of you guys and girls that are interested in using our pro real-time, which I find is probably one of the better ones out there, I'll put a link in the description after I do this update. It's a free service. You just go to their website, you register, sign up, and then you can use their charting software. This only includes the official market hours, so it only includes the pricing within the official trading hours on the S&P 500 and in regards to other indices and so forth. Now, what I've noticed is if you're using charting software which includes the futures trading as well, obviously the price structure and the pricing will be different because we get extended moves outside the trading hours. So my point is that if you've watched someone else's video and if they're including the futures trading, it probably very well avoided this pattern. Now, I found over the years, the many years of trading and using patterns, the most reliable is to use the official trading hours. So my point is, example of that is, as I said last Wednesday, I was looking for the move to go low and back high, which on the Thursday we actually did open low, but we closed high. Likewise the following day. And then on Monday, we had this spinning top, which was low, and then Tuesday was a high. So we've gone low to high, which, as we can see, has still stayed within the structure of this rising wedge. So I know that the more reliable time to use the charting is the official hours, not including the futures. So in saying that, we can see we've moved towards it right near the top end of this wedge, where I believe we could be getting close to a termination point and a major change in trend. Now, first of all, yesterday's closing price, we opened up high, couldn't hold on to the highs, and pretty much closed near the open, which in candlestick terms is we have a gravestone doji. it doesn't conform to a shooting star, which would be this. That's a perfect example of a shooting star, because there's hardly any body on this candle, and the wick is not long enough. You have to, for this to be classed as a shooting star like this one, you have to, as I said, one, to fit the criteria of body, and then the wick has to be at least minimal 2 times the length of the body, which we've got here. It's almost about 3. So if you want to check it yourself, you can go to various websites like, I think, investopedia.com. It has a section of candlesticks, and you'll see that conforms to a gravestone. So more importantly, when we're looking at candlesticks, especially possible reversal candles, is where does it sit in the recent move. So obviously, one, we have a gravestone doji that's formed at the top of this wedge. 2, in regards to using Fibonacci angle, we have, if I move down here, we have the 50 Fibonacci, so it's sat right on there, and that 50 Fibonacci. And also we have the longer term, I don't know if you can see that 50 Fibonacci there, so it's what I call an intersecting, 2 equal intersecting Fibonacci measurements, which is a pretty strong inflection point. Slightly above that we have the, I believe that is the 50 moving average at 26.28. We can see the high of last night's session was 26.25. So we didn't quite get to the 50 moving average. And as I'm doing this recording, futures is currently down. The US S&P 500 index is currently down to 2604, which puts us probably, if I was to zoom in a bit here, following day, so I might just zoom out there again. So this is Thursday. This actually puts us outside the bearish rising wedge, which is about, we're sitting about right here. Whether we continue to sell off or not remains to be seen. We just have to wait to see what the session does later tonight. Knowing how the fractals work within the session and the smaller time frames, we'll probably get an hourly move up to probably test at least the small body of the gravestone doji at 2618, and then we could go back down again. Well, as I said, we'll have to wait to see how this closes out.